Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the January 27th stock market report for January 28th, or whenever you want to use it, actually. It doesn't matter because it doesn't seem like much is going to change anytime soon. I'm going to go ahead and start off today with the New York Stock Exchange. It was up 1.35% today. However, volume was lower than the day before, and that's now the fourth day in a row that volume's coming lower, while the market, I believe, during those four sessions is still up, and yes, it is. So, once again, we're rallying each day on lower and lower volume, and there's no way to get around that. It's not bullish, it's bearish. Let's get an uptight close, and as you can see, there's not a little baby tail on the bottom indicating a little bit of support. No, instead there's a tail at the top, meaning that it opens at the low of the day, goes to the high of the day, and there's a little bit of a sell-off to pull it back. That's the second day in a row the market's come off its highs after having a weak open, strong close. So can't close near its high of the days. That's not a good sign. Next, let's look at the S&P 500 since it's actually the exact same thing with the volume. It doesn't matter, but let's look at the price action, and you'll see the same thing. You'll notice that it went from hammering out potential bottoms on, let me give you the dates, on the 15th, the 16th, the 21st, the 22nd, and the 23rd, and then all of a sudden it's just can't hold on to the highs it gets. And as it rallies the past 3 days, or the 1, 2, 3, 4, 5, and use the past 5 days, it's up 5%. Volume is lower. So we're going higher on lower volume. Can that be confirmed in the Dow Jones Industrial Average? At first, no, but yeah, definitely. So you can see that as the Dow Jones Industrial Average started to go higher in December, no volume was over the 50-day volume average, basically. Then on 2009, as it starts to sell off, volume picks up. And then after it hits the lows and tries to turn up the past 4 days, or 3 days is actually better, you can see volume is much lower than the two big red bars in the middle there. That's the volume the past 3 days for each 3-day session. So as the market goes up, volume comes down, and the most important index for me personally is the NASDAQ, because that's where the technology stocks are, the innovative companies are, etc. And the fact that the last 2 days it's up 1.87%, 1.9% with a lower volume is not good. As you can see, volume has been lower each day. And after the November low, which had volume lower than the October low attempt or the September low attempt, with both failed, December's rally came on lower volume. The end of December's rally came on lower volume. The sell-off came on still lower volume. And then it tried to hammer out a bottom on the 15th on higher volume, which made it look like, oh, maybe support is coming in here. And then within 2 days, it sells off huge on a big down 5.8% day. But volume is lower. So it indicated maybe that the sell-off wouldn't continue, but still every chart looked like it broke down. Held in there at first, and now it's held in there a little bit again, but went almost back to the lows at 1477, the old lows of 1440. But it's held there. Now it's rallying on below average volume again, and it's getting lower each day. So not what you want to see, and you can see the same thing here. Tails on the upside, not on the bottom, indicating a spinning top, which is a bearish pattern, and a shooting star, but they come from the top. I don't go that deep into candles anymore, so if you want the exact terminology on these candles, you can go look it up. Me, I just know when I see a big shaded candle, that's not good, and when I see a big open one with a little tail at the bottom, that's good. Or if I see almost a big open one, LOD open, HOD close, that's really good. I just keep it that simple. It works better that way, everybody. And then the S&P 600, we can look at it, and the volume's not on here, but go look at the Investors Business Daily. You will see that it also is rallying the past 3 days, up 2.7% on lower volume than the sell-off in 2009. So far for 2009, since the highs, the market is down still 12%, and since the beginning of the year, it's down 10% already for 2009. And as they like to normally say in the stock market, as the first month of the year goes, so goes the market. However, since I keep hearing that from a couple of people, it may not do that, but maybe enough people aren't saying it that it might work. Bottom line, who cares? We don't need to know the future. We just need to know what's happening right now, and right now we can clearly see In the long term, from the 2008 top, we're in a downtrend. From the intermediate time area around the July, August, September area, we're in a downtrend. Let me go back to the NASDAQ because this will really show you what we've really done recently. And if we want to look at the short term, look at the last 5 days, let's say, or actually look at the last 1, 2, 3, 4, 5, 6, 7, 8 days, we can see that the NASDAQ has gone a whopping negative 2% to the downside. But even worse to me is the sub-intermediate trend, which is really the boring part. From 1027 to 127, which is a full 3 months, the market has moved a whopping negative 0.07%. So basically, if you fell asleep back in excuse me, I had something in my throat there, October 27th, and if you just now woke up today, nothing's changed. So in 3 months, not much has happened with the market. It's just down slightly, about negative 0.1%. So as you can see, not much is happening in our markets, but is much happening elsewhere? Let's take a look at the China stock market on the Shanghai SE Composite, which we haven't done for a while. And I know we don't have volume here, but if you have a Bloomberg terminal or any other terminal that can show you volume, you can see off the September low, volume was higher after a lower volume sell-off in September. Then after a lower volume sell-off in October, November, the November rally, especially this day here, notice how I can remember this without even seeing the volume. On 11/13 and 11/14, the Chinese stock market rallied on very strong volume. Since then, it has put in higher lows at first from November to December, then slightly lower lows, but since recently in 2009, since the date of 116 and 120, when the Chinese stock market index retook the early January highs of January 6th, it is now back to making higher lows and higher highs. Since the November lows, the Chinese stock market is up 15%. And let's see how much the United States stock market is up from those November lows. So 15% for China, 14% for America. So it pretty much is following the same thing. But look at the chart. Look at the October low, November low in the New York Stock Exchange, and look at the recent low now. Now compare that to the Chinese Shanghai SE Composite. It looks much more bullish on the Chinese composite. A weekly chart looks much more bullish. The way it moves down, if you can look at the volume, it was very ugly at first, but since the up weeks to down weeks, I do believe recently, I do need to check, so if I am wrong, I do apologize. I believe you will see there are higher volume up weeks compared to lower volume down weeks. And if we look closely and look at the price action, you can see hammering out tails everywhere in that November to December downtrend, and you can see hammer out high of day closes all over in December. Look at all these high of day closes, and then look at January. Look at this tight range near the end of December when not much trading happened, very tight, and then once again in January, look at the high of the day closes. High of day close on the 5th, high of day close almost on the 6th, high of day close on the 14th, near high of day, not quite there, and so on and so forth. And then recently, after the highs hit on the 22nd, the past 3 days, let me go back, the Chinese stock market has moved negative 0.7% in a nice tight range. Bottom line is, from October 27th to now, while we've gone nowhere, China has gone nowhere. But while our pattern has been very volatile, China has been very tight. So it looks like the Chinese stock market is becoming the new leader. And I know a lot of you don't like to hear that, but it is the truth. I suggest to get a good software that has the availability to look at Chinese stock market charts, because the ones that break out and move are going to move 1,000% to 3,000% in a year. You're not going to get probably 1,000 to 3,000% anymore in the United States. You'll probably get 500% to 1,000%. But our move in Taser of 2,390% in 9 months, I just can't see that happening again. Let's look at the metals before we end this. Oil, it's down to $42. Like I said, in between that 40 to 45 range. I thought it would be 35 to 40, but it's 45 to 40. It's in that range, not 35 to 40, 40 to 45. And then let's look at platinum to see if it's still holding Absolutely. And once again, another very bullish hammer day, even though it didn't close higher than the open, had a very bullish intraday session. Silver, the same way, holding on after that big 4% breakout. And gold, holding on since that huge 5% breakout over the 200-day moving average. Gold is definitely looking very nice here. And as you can see, this looks like a cup base, and it looks like it can break out of a cut base. However, it could also fail. So if it breaks down below the 50-day and 200-day moving average, it looks like they're going to get close pretty soon. You'll know to get out. How's the United States dollar looking? Well, after looking bullish for quite a while there, sadly, it's starting to lose its luster a little bit after it had a negative 1.1% day yesterday. Held on to the 50-day moving average today. However, it does look like it's weakening. And I'm running out of time, so I'm going to have to wrap this up. Have a great week, everybody. I'm sure we're not going to go far, but once we do break out up or down, it should be good. Aloha.